Gold bullion has been of great interest over the last few months as its price has moved upwards and it's starting to correct a little bit now. I've written about the seasonal trend for gold bullion in my previous books, and here you can see that I've got a seasonal period from July 12th until October 9th. I do want to say the main sweet spot for that trade is September, and investors need to take a look at reducing or exiting positions towards the end of September if they start to see some weakness in gold. So where do we stand right now? For gold, well, for historically speaking, you can see here October, both on a mean and average basis, it tends to be weak. This is from 1984 to 2015 using London spot price here. In my 2017 book, you can see here that it's actually underperformed the S&P 500 over 70% of the time in the month of October. So October tends to be a little bit weaker of a month. So investors need to be a little bit cautious with gold trading positions at that time. So let's take a look. What we've seen here is we've seen this trading range from 1200 to 1300. 1200 in July, the beginning of the seasonal period, around the beginning of the seasonal period for gold bullion. We saw a break above that, but recently we've seen a break below the 1300, which was acting as support. So we're back into that trading range. So we're starting to see some weakness for gold bullion. And you can see here, the full stochastic oscillator has become oversold, so we might see a little bit of an uptick. But overall, the main consideration here is that we are below that level of support. We're starting to see a little bit of weakness at this time, just before the seasonal period finishes for gold bullion. So investors need to consider, from a seasonal perspective, of reducing positions in gold bullion. Thank you very much.